Hi, everyone, and welcome back to our Financial Friday. I know everybody is getting busy and ready for the holidays. We're so glad you're here for session two of our four-part series focused on helping travel advisors feel more confident, organized, and in control of their finances. So, if you joined us for session one, you know the series is designed to build week by week, breaking down the financial side of your business into manageable, real world steps you can actually use. And if this is your first session with us, welcome. You'll still get a lot of value today, and you'll receive replays of all four sessions. So today, we're continuing the conversation by diving deeper into the financial decisions that impact your taxes, your cash flow, profitability. This is really about clarity. It's not about complexity, and it's about giving you tools you can apply immediately. So today, to guide us through today's session, we're joined by two experts from the previous series who truly understand both the numbers and the realities of running a small business. So, Radhika is a founding partner, CPA, and entrepreneur with over 15 years' experience in accounting, finance, and banking. And she specializes in helping small business owners understand their numbers and use them to make smarter, more confident decisions. So you could wave to everybody, Radhika. And then Swagat is a partner and chartered accountant with more than 14 years of experience in accounting, auditing, and tax compliance. And he works closely with businesses to strengthen financial processes, improve visibility, and support better decision making. So, Swagat, say hello
Yeah.
to everybody.
Hi. Hello, everybody.
And I just love this team. We actually use them inside of Travel Industry Solutions. We also have quite a bit of our customers who are using Olaham for their bookkeeping, whether it's ongoing bookkeeping, one-time audits, as well as tax preparation. So, as a reminder, this session is being recorded and it'll be placed on our YouTube channel within a couple of business days. The next session will be held on January 16th, and you will automatically receive reminders since you signed up for all four parts. I will also post a link to the free download. So simply fill in your information. You'll get the guide delivered to you in an email. And I'll also include the link to schedule your consultation with Olaham if you choose to do so. But listen, guys, I want to remind you that many of us as travel advisors really sometimes get the hair up on our back when our friends and family call us for free advice or want us to do things and tap our brain without compensating us. So if you do set up a consultation with Olaham and they're happy to discuss your situation, just please keep that in mind that they're not going to be giving you very, very detailed, specific guidance in your initial consultation with them. So, without further ado, I'm going to turn this over to Radhika and Swagat. And if you have any questions, please put them in the chat and we will reserve some time at the end to answer those questions. So today's session is going to be slightly shorter. The last one, I think, went over an hour. So today we're aiming for about 30 to 40 minutes. So go ahead and take it away, Swagat.
Yes. So, hello, guys. So, today's session is mainly for travel agents for making taxes simple. So, over a period of years, we have understood that small businesses they also struggle with the accounting, but major part which they struggle is the taxes and the compliances. So US in general has very less compliance for regarding taxes like the 1099s or payroll or federal or state taxes. And the government is also very lenient in giving the extensions if we file it on the time. But there are many things which a small business owner should take care before the year end so that his taxes are made simple, and also he pays taxes on, he can optimize his taxes and net profits.
And
So, yeah.
honestly, the goal that we have today is for you guys to, feel confident on what your, tax partner is doing. So you will have, a CPA or maybe, EA doing the taxes, and then, you don't know what's going on. You will try to tell them to maximize your deductions. But, today I think we want to put very simply in simple terms to all you guys, so that you have points that you would remember to check on your tax returns, and then something that we can remove the jargons from, and make you understand that this and this works like this. And I think you will see that by the end of the presentation, you guys would be more confident with what exactly should your 2025 tax returns look like. So uh, I'll take it from here, Swagat.
Yes.
Probably
Yes.
bring you in later. So what we're trying to do is, I think if you attended the last session, I would like to recap for the people who are new here. We touched a lot of things on accrual accounting. So for you to understand the business better, how accrual accounting is better than cash. That's what we touched on. So if you go back to our presentation there, that's where I want to start. Understanding what makes revenue in your tax return is very very important, because with travel industry especially, it's a very vague and ambiguous area, where you need to really understand that some of the freebies that you're getting and enjoying are actually 100% taxable. So I want to take you through a little bit of commissions and fees that you're taking. So these would basically go on your schedule C. They go on the line number as a item 1 as your gross receipts. And what that means is that this is your main income as a travel agent providing your services. This would constitute as majority of your income. Then you have overrides or your tier bonuses from host agencies that you receive. They feel very nice, they feel very warm, like extra love that these guys are showing. But honestly, the IRS calls it ordinary business income. So those all are 100% taxable, and you have to include them as your fully taxable income. So a Any lot of issue? our, we do get a lot of bonuses. For instance, I just got several of them from Regent Seven Seas Cruises, and they were in the form of a virtual gift card. So
Yes.
I'm assuming that those are also taxable events,
Taxable.
because they are a supplier incentive for
Yes.
me for selling, a sailing during a specific period of time or whatever.
Yes.
Yes,
Yes.
those are completely taxable, and also referral fees that you get, even if it's $100, $200. We always advise our businesses to have an Excel sheet, because there's no way you can remember all this at the year end when you're doing your taxes. You need to track this throughout the year, and these referrals and fees, even when we pay businesses, it's either Stripe, Venmo, PayPal, nobody remembers that. So, unless you have a tracking sheet for this, and there are a lot of tracking sheets on the IRS website as well. So, I always tell small businesses that these small kind of things that you receive, it's better to have them on an Excel sheet and present them in your income than what if you get audited, and then you are kind of going in every $10 and $5. It's just not worth it. It's a lot of hassle to go through everything later. So just keep them handy. As Sheila mentioned, the supplier incentives, the if you hit a
platinum with a tour operator, whatever you get, everything is taxable. It's not a gift. You cannot categorize that as gifts. I do see a lot of businesses, free cruises that they get, that's categorized as gifts in travel agents, books. No, it doesn't work like that. But we are definitely going to share what works and what people don't know, because we are all trying to put these things to reduce the taxable income, but the real
Mhm.
gold is somewhere else, and I'll probably come to that later on. The fam trip discounts, that you guys get. There was this client that I had last year who forgot 11,000 that he received in supplier bonuses, uh, because there was a 1099 cent. The IRS caught that, and it's really something. When that happens, it's very stressful as well. The IRS will send you a letter. It's called the CP 2000 letter that shows you the information that they received from somewhere else. So it's very important for you to match these things as well, because sometimes the problem happens at the other end. So if somebody sends that, they send you a 1099 and you earn this income and you have not actually earned it, it's a problem, right? So it's better to reconcile all that before you file your taxes. You ask whoever has paid you, you kind of take all the documents together and see that it lays down a clear picture for everyone. Sagar.
Yes. So now today, so this is the deduction. First, the first slide was all about the income part, and this is about the deduction. So majorly there are four deductions or the expense deductions which a travel agent should be taking. Those are: first is FAM and educational travel, second is home office and utilities, third is business mileage and travel, and fourth is technology and marketing. So, for familiarization trips and for education travel, so there 100% of airfare lodging is can be claimed. 50% of meals can be claimed, and the mileage there are two types of calculations. Either you can take the actual expenses which you have spent on the mileage, means the car which you drove around, or you can take 70, it is 70, this, right?
Cents.
70
It's
cents.
yes, it's
70
70
cents.
cents this year.
Yeah, 70 cents of the cost. And in that, there is one peculiar thing actually, which many people, if it is audited, then IRS pinpoints it. The travel from your home to your first client, it is not included. Or travel from your last client to your home, it should not be included in that 70 cents. So, apart from that, if you travel from one hotel to another hotel or from one client to another client, that all is included in it, and you can always take the deduction for it. So if you go to some country for familiarization, you of the or checking hotels or bookings, then you can take the airfare, the Ubers, the taxi, lodging, everything, 100% of that, and 50% of your meals.
Yeah, I
And
think
Just
there's
need
for
to.
always questions. Sorry, I didn't mean to interrupt. Go ahead,
Oh,
Radhika.
sorry. No, no, I was just saying that for mileage, I know it's a hassle, like, 70
Hmm.
cents per mile and everything sounds very good. But I would suggest that, anybody who wants to really get, because this is huge money, guys. So this is like 3,000, $5,000 off, your taxable income.
Hmm.
So I would suggest, apps like the Mile IQ, Trip Log. There are a lot of apps that you can use to track miles.
Yes.
I can share the list with you guys, the common ones that, there's also a mileage log that you have on the IRS website. Very few people, know these things. If you just ponder
QuickBooks
on,
also has some features about mileage
correct.
actually. So, and yes, so I was coming to that point that you should always keep a track of these records, that where did you travel and what was the actual purpose of that travel. So, the more the details you keep, when you make those entries in your books, that is better actually. Whenever IRS audits, you can give them
And then of
those
course,
details.
it has to be on the conservative side. So for
Yeah,
example, I
exactly.
take a first class flight to Hawaii for, just one meeting that I have there, which, I consider, put as training on my books.
With
That's the
children.
red flag. And
Yeah,
and now what the IRS is doing for 2025 is that, like us, we using AI for bookkeeping, they are using AI to track down discrepancies. So it's very easy for them to find these things in the books. So now I think, it's very wise, and that's why it's becoming very important for us to know these nitty-gritties and have somebody, take a deep look at this. I know that, a lot of people would like, the whole meals to be deducted, but honestly, that's not what the rule says. So, why not save on other things? So when I told you that, I'll come back to that later, I want to make that point over here. So there's something called quasi business expenses. What that
mm,
means is that there are business expenses that are personal, but the ones that can appear to be legitimate. For example, you're throwing a Thanksgiving party, for example. A lot of the expenses that you spend on arranging that party, a lot of those expenses are actually allowed as deductible expenses. A lot of people don't know that. Or, if you go to a Best Buy and you buy an iPhone, if you just certify that, you're using that mostly for your business, that can be considered as a business expense in totality. So, these kind of things that, we uh, spend on, it's good to spend them on the business card if you have, if you can legitimately show that, this is the receipt, this is what I got, and this is what I use in office. Because the space is so convoluted. If you're working from home, it's, there are a lot of things that you can constitute. A lampshade, for example, I use it in my office, so, I got it as an office furniture. Or a desk, that I have in my living space, that, I sit and work on. So these kind of things, I actually, would like to share a list with you guys later of these quasi business expenses, which, make sense for you to put in, rather than, putting in these kind of trips, or, exorbitantly odd expenses that are very, sore to the eye. So, that these things, I think, require people who can, guide you on, okay, this can be structured in this way for you to get, the maximum benefit that you have. So Swagat, do you want to go through the home office?
Well, I first of all, you
Yes.
said something that just scared the tar out of me. And
Yes,
I
tell
had not thought about that, but how the IRS is leveraging AI to,
Yes, why wouldn't they? I mean, it's, we are using it for our bookkeeping. Why wouldn't they? And we have to be, we have to get out of this bubble that, hey, I'm not never going to be audited. You'll be surprised, because it's like, winning a bad lotto, that, you get selected and then you have to be audited. I've seen very, very small businesses audited as well lately. So it's very important that, you kind of keep a tab on what's going on in your books. I do see very
generally what happens, you need to maintain the trend which was following.
that is
So,
correct.
yeah, so there,
so I
if
guess I'm not
you,
going to be buying my daughter a car and writing it off in my travel agency
no,
this
surely
year.
not. Surely.
Shucks.
Even the home office and everything, it's
Yes.
people lose out on these things because it's work. But you have to understand that if you work, you are going to get better deductions. For example, the mileage thing that I told, if you're going to track, you're going to get a huge deduction on that. If you track all the utilities, interest, insurance, repairs on your home, then you are getting easily 2500 to 4000 of taxable income. But if you don't, then you have the deduction that sucks, which is 1500. So it depends on how much you put in, and it depends on then what you have left at the end of the year. So even it's a little bit of pain, it's a huge gain, because these are the people who will receive refunds, which we like at the end of the year, rather than paying taxes. So I would suggest that become vigilant on tracking.
One of the things that you mentioned too is about keeping track of everything on your business credit card. And I see this question come up a lot in different Facebook groups online. And people say, should I have a dedicated business card? Can I put it on my personal card? Personally, and I'm going to let the experts answer this, but have a dedicated business card, period.
Yes.
It's so much easier for me. And you guys know my slogan, time is money. And so if I have to go through and separate personal and business, that's costing me time and money. So just keep it separate. So what are your thoughts on it?
True, 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 Sheila.
Yes,
So,
and definitely. I mean, and it's also, it's not just saving time, but if you're an LLC, I think, you would be surprised, because you're basically, what is an LLC? It's a limited liability company. You're basically attaching limited liability to you so that nobody can come after your own wealth. But if you're convoluting the way that you're using your credit cards, that becomes a problem when you have to face any penalties, because
no,
they
those
are
are actually
especially
disallowed. If the
correct.
business expenses and personal expenses are convoluted and it creates a confusion in the audit, those are straight away disallowed as a business deduction. So it's better to keep everything separate. And of course, you can do your personal expenses from your business cards also, which are like quasi business expenses, which you can use as a business deduction. But don't mix them up.
Okay.
So coming up to the next deduction, the favorite one, the home office deduction. So most people, most travel agents, which are single person or one man show, they operate from their offices and they can always take the home office deduction. So it's kind of a depreciation where you actually don't spend the money, but you still get a deduction for that. So there are two methods according to the IRS, which is one is the regular method and second is the simplified method. We always suggest to go with the simplified method, and the simplified method is square foot of your house into $5, but it is limited to 300 square foot. So $1,500 of expense straight away for your home office deduction you can take by the simplified method. The other part is the regular method where you need to measure your office square footage, the area which you use as an office. Might be your outhouse or some room. You need to measure the square foot of that and you need to divide it by the total square foot of your house and multiply it by the rent, mortgage, all the expenses which you have. So you need to basically proportionately, according to the square foot of the home office, you need to bifurcate those expenses and then take it as a regular under the regular method of home office deduction. And
So the regular method, as I mentioned, would require tracking, would require receipts and everything. And the simplified method is called simplified because it requires no receipts. But uh,
yes,
if
but
you
it's a
guys
safe
can,
harbor. Yeah.
yes, but if you guys can track it, and if you are, confident that, you can basically use the regular method, and you have everything that is needed to support that, that would, result in much, much higher deduction.
Yes. So the coming to the third deduction which we discussed actually, the mileage and local travel.
Yeah, so Agat,
So
I think we should move on to the next. I think the mileage one. Do you want to add something to the 70 cents per mile?
no, the 70 cents is it is for 2024 and 2025 also. Every year it increases. So in later part you can check. Uh, the fourth part is technology and marketing. Most of you use CRMs, some the sales software or funnels. Also, you use many software like task management or client base, Strabify, Access, like that. You can always take the deduction for them. If it is also used for your personal expenses, then we suggest that you take 50% of the subscription charges as your business expense and 50% as your personal. And last part is actually of equipment. If you, I don't know, but travel agents generally don't have any capital expenditure or equipment. But if some of them have laptops, cameras, external monitors, so you can always actually take whole of the expenditure to your as an expense instead of depreciating it over the years. So under section 179 of IRS, you can immediately expense out those expenses like laptop, cameras, and monitors and everything. Uh, of course, there is a limit which is around 1 million, right? 1 million.
Yeah,
Uh,
1.2 million. It's
yeah,
around
1.2
1.2.
million of the total cost. So I think no equipment. I don't think so if anyone buys that much of equipment, but you can directly take those expense out and expense it out. The last part is the bonus categories, where you can take the bonus expenses like professional development. So many times you take some professional courses where you upskill yourself, like you attend some conferences or you take some memberships or you attend some events. Then the subscription for those you can always take it as an expense, as a business expense, because it is something which would increase your upskill yourself and increase your sales. The second thing is your insurance. So health insurance is something, if you're self-employed and you're not covered by health insurance through your spouse also, then you can take that health insurance expense as a business deduction. And later part is like bank fees, your mortgage expenses, or your business licenses, everything that is expensed out to run your business, which are operational expenses. You should always quantify them and take it as an expense. I also see that
Well,
many
let's
people,
quant let's clarify that.
yeah,
You're not going to
yeah,
deduct your whole mortgage. You're going to do your home office and utilities,
yes,
the
yes.
the method that was described
Yeah,
earlier.
that's
Yes.
the regular
Yeah.
method, regular method. And I was coming to the point that many people, until they have sales, they don't mind to have these books ready or carry over those losses. So we always suggest that whenever you have business, even if you don't hire a professional accountant, you always have that sheet ready and claim those losses and carry forward them. So when you have actual business profits, you can always set them off and have less taxable income. Radhika?
Yeah, so the next is, managing all the 1099 forms that you receive. The due date for this is Jan 31st every year. So, there are two parts to this. There are the 1099s that you receive, and that there are the 1099s that you must issue, the contractors and everyone that, works for you. Generally, now because the working environment is so global, I want to talk about the 1099s you issue your contractors. I see a lot of businesses, issuing 1099s. If they're working with foreign contractors, I want to mention that even though, there are no 1099s for them, you guys need to collect a form which is called W8 Ben. And a lot of small businesses don't know this. That's like, the W8 Ben filled in by a contractor that works for you who is situated
Over.
in a foreign country is like an insurance to you, that you have done your due diligence. Because if the IRS asks you, what are these payments for? Okay, where is the W-8 Ben at the end of the year to justify that? You wouldn't have that. So I want you to note these things down. And then everybody knows that, the ones that are in the US, you would be taking their W-9s and, having them with you. So when you have at the end of the year, these 1099s that come to you and the ones that go out, I would suggest that you maintain two separate folders for reconciliations. The ones that you receive, it's very important for you to go back and see whether those numbers make sense. There is reconciliation required there. Some of you,
Yeah.
just take it as face value and move on. Not a good idea. A lot of times there are discrepancies in the 1099s. Even,
Basically,
when.
so for 1099 Ks, so when you are paid through some third party agencies like credit cards or Stripe or PayPal, the end of the year, what happens is the December amount is not credited in January, it is sometimes credited in the later part, and we forget. So if someone is following the any cash basis or accrual basis, we forget to reconcile that part where he, so 1099K would be showing you an higher amount of which you received, and the actual receipts would be less, but
Correct.
you need to actually reconcile both of them. If you are following the cash basis system, you might take whatever you have received as your income, but you should have a reconciliation ready, because IRS would be coming and asking that your 1099K value shows something different and you are showing your income is something different, and there might be a huge difference between both of them. We have seen many people having that. So you should have a ready answer with the reconciliation to provide to the IRS that this is why there is a difference.
Correct. And
Good to know.
sometimes, people don't receive, see, from PayPal, Stripe, Square, they don't receive the 1099Ks and they don't report that income. But
Hmm.
it's an automatic penalty if the IRS, finds out that,
Finds out.
that was supposed to be, included in income and you have not included it. You will have to fight off that penalty later on. Sagar, do you want me to take this one as
Yeah,
well?
so
Yeah.
yes, so
So,
quarterly taxes. So these are estimated taxes. Most of them, most of, I know that everyone must be knowing them, but many people, very less people actually pay them, especially small business owners tend to forget about it. So generally, every small, as a thumb rule, there are many criterias for that. But as a thumb rule, what I suggest is if you have tax payable last year more than $500 and you expect something more in this year, you should always be paying your estimated taxes uh, accordingly. So it is always the first estimated taxes comes in April 15th, then June 15th, then September 15th, and January 15th. You should pay 25% of whatever you think you owe to the IRS at the end of the year. So until January 15th, everything is paid off. And
so,
there
you
is a
can.
safe harbor rule also. Yes.
Yeah, it said that, you can pay 90% of your current year. I'm telling you guys, don't do it. The
Hmm.
90% of the current year is so difficult because if you're in a seasonal business like a travel agency, what if, at the end quarter you receive like tremendous business? You're doomed because you're heading for a penalty straight away. So what is a good idea is actually, if if you had income say under 150,000 last year, it's a good idea to pay whatever tax you paid, 100% of the tax you paid last year. If you had an income above 150K, you should pay 110% of what you paid last year. I think that's the golden rule that you should
Rule.
follow. Do not follow the current year 90% 50% rule, it's not a good idea to follow that. So I think, if you follow the last year rule, what you paid last year rule, then you're in a much, much safer place when it comes. You're never headed for a penalty that way. So,
Okay.
do you want to add something to this?
Uh, no, I guess we are good with this, right? So we can go ahead with the
So this
uh,
is basically we rubbing down again, about our gap principles, the ones that are important to you, which is, the way that revenue is recognized. It's recognized when it is, incurred rather than, when you receive the cash, or rather earned revenue rather than you receiving the cash. And the expenses are, recorded or recognized based on, when you incur them rather than when you pay them in cash. We just want to make sure that, if you're following accrual, you remember these basics. Any error corrections, that are pending. I think, expense matching charges in the period that they are generated. If there are error corrections in that, fix it, document it. You can amend your tax return if you find out something later. Don't shy away from amending your tax returns. If it's a huge thing, you should definitely, it's probably a good idea to go back and change on it rather than let it just be there as it is. And then the bottom line is, if you follow very small things throughout the year, all this process is not going to be daunting at the end of the year.
That's
yes.
why I have you
Yes.
guys do everything for me.
Yes.
Well, all right. Well, let me know when you get to the end because I don't remember how many slides there are, and then
No,
I'll
no,
win the
this is
questions.
the end.
This
Okay.
is
All right.
yes.
So we have a few questions here. So Kelly asks, if bonus commissions are paid out through our host agency, shouldn't we receive a 1099 for it? I would assume that it's included in your overall income paid out uh, to you by your host agency. I would make that assumption. Would you guys?
Yes.
Yes.
I think
Yes.
yes, if there are any bonuses or commissions, all the income that you receive from the agency should show up on the 1099. So
Yes.
my question to her is that, has she found out a discrepancy in that?
Well, I think that that would be a question if she has that she
Yes.
should go back to her host agency and get some sort of a breakdown. And she can
There can
compare
sure
it to
be,
her.
but I just want to let her know that the 1099 is not some gospel. Somebody is doing this for, everyone that's running a business, and there are a lot of mistakes in it. So a small categorization mistake from Angela to, Angelica can change your 1099 based on a human error from the other, agency. So it's a good idea to
But
reconcile.
yeah, but even if she doesn't receive it, if she has received the actual money, she should report it under her income tax.
So she said no discrepancy. She just wanted to have a clearer understanding and thank you.
Okay.
All right. So Christy wants to know, can you deduct the cost of a business or branding coach?
Yes, Miss. Generally, she's saying about for branding her business, right? Like a marketing expense.
If it's a marketing expense, or let's say she
Yes.
has a performance coach or some sort of a business coach, is that typically a deductible item?
Yes, if it is enhancing your sales and if it is improving your sales, it is directly related to what you are doing as a main business, then it is always
See, a lot of
deductible.
people I see in the United States, they use, business coaches for making them
Mhm.
more disciplined in businesses.
Mentorship.
That's a very questionable expense. And if you're audited, that would be questioned. If you're not, it just passes by as a business expense. But that to me, as a CPA, would be, there's no skill enhancement that is, improving your business as such. It is for your personal,
Mm.
for your personal training to be a more disciplined person. So I wouldn't, add it as a business expense, honestly.
Okay.
So branding coach can actually charge you a branding consultation fee, which can be a business deduction actually. But if that branding coach is helping in your personal branding and skill means helping in your personality development, which is not helping in your business, directly helping in your business, then it shouldn't be actually used as a business expense.
All right, great. And I just wanted to let Jazz know that yes, we are recording. The recording will be placed on our YouTube channel, and also we will push out a link to everybody in our next newsletter, so you'll have that link as well. And without further ado, we're just going to let everybody. If you don't have any other questions, wait a second, I do have
I
one.
do. Oh, go ahead.
My CRM and web hosting are included in my host agency fees. Is there a way to claim deductions? Well, you're paying your host agency a fee, which is all, and that they are
Included.
charging you a fee based on the tools that they're providing to you. That's generally the way that it works, Stephanie, is those fees are charged to you to cover some of their outside expenditures. So I think your question is, can
So
I
there is
just
no,
create
yeah.
an arbitrary number? Let's say my host agency provides me with Travelify, and I think that my host agency is paying $15 a month for my user seat. Can I take my fees that I'm paying my host agency and then come up with an arbitrary number that I'm not really paying out in cash to Travify and expense that? I assume that's sort of the question.
Mhm.
I would say probably not. I mean, but I'm going to let you guys.
It's all
Otherwise, we
included
can
in
all
your
make
host
up
agency.
numbers on things that, you know, that we I could say, my host agency charges me $49 a month, but I think that they're spending this amount on all of these other things. So I'm making an expense to me.
The thing about taxes all over the world. I want to say this. I work with a lot of clients from very many different countries. The thing about taxes all over the world is that till you're not questioned on something, you probably are getting by on things. I would say that, put things that will give you a good night's sleep. Do not,
Yes.
add things that, you are yourself questioning, because, the thing is that, if you have an aggressive CPA, let's say, he said, I'll give you this deduction and that deduction, and he will, because he wants you to be with him and he wants you to pay him his fees. But the moment that the IRS sends you notice, they are not sending a notice to your CPA, they are sending your business a notice. You are taking that risk, and I want each one of you as a business owner to understand that it's you that is taking a risk. It's not your CPA, it's not the person who's making your taxes. So you should be very, very conservative. And if you have enough proof, you can put everything as a business expense that you find legitimate and have legitimate proof for. But if you're questioning whether this should be here, it probably shouldn't.
Great. Well, I think that's all we have for questions today. Thank you guys so much. Don't forget, our next of the four-part series is, I think I said January 16th or something around.
Yes.
Let me look at my
Yes.
calendar here. Think it's around January 16th at 12 p.m. Eastern Time. So we'll look forward to everybody joining us then. Everybody have a wonderful holiday. Thank you, Radhika and Swagat, for being with us again today and sharing all of this valuable information. And please, guys, don't forget to grab the free guide and also the link to the complimentary consult. The complimentary consult link can also be found on our website. If you go to our website and what we offer, you'll find a dedicated page for bookkeeping and tax prep services. And if you are a current TIS user, you'll also find their information inside of your web application. So thank you so much, and everybody have a great day.
Thank you.
Thank
Thank you,
you.
Sheila.
Thank you,
Thanks,
everybody.
everyone. Bye
Bye.
bye.